Good morning, guys. Welcome to the Inflation Show. Those of you that did not know, we've talked a lot about inflation, but we didn't have the numbers completely yet. Today, CPI's come out at 8:30. That has already happened. That happened at 8:30. 0.8% increase. We're now at 4.2% inflation. What happened to 2%, they say? Isn't the mandate 2%? We're at 4.2% now, you say. Really makes you think. That's a pretty big jump. Now, this was what I expected. I expected a obviously hotter than expected sort of return on inflation, which was this is where it's funny because we have economists that put out our expectation numbers, but then the market goes, well, we expect there to be more, and then the rest of us that are thinking a little bit different mentality, we go, no, it's going to be a lot hotter than that. And this is also where we can talk about what we think the numbers are, but then it's what is the reaction the market's going to have. It comes down to an argument that's very similar to like a good and evil argument, where what's good, what's evil, what is inflation in the equity market, and is that good, bad? Is that good for now, bad for later, bad for now, good for later? And none of these things really have um, much of anything to them. There's not much of an argument, and so it is very sort of sentimental and emotional in some sort of way. And we can go, oh, we're surprised by the numbers. We're gonna have to react now. None of that really matters right now, and this is where my bullishness to continue to buy again on a day like yesterday, buying on that low, even on mega caps where the Nasdaq is going to get negatively affected the most. The Nasdaq, we knew growth was going to get beat up by inflation the most, right? And I've said 90% of my portfolio is value oriented. The other 10% is to take risks through growth. Even now, yesterday, when I bought on the low, I know that's going to get negatively affected, but if we take a look at the number here, you're going to actually see that we're still opening higher than the low here. And some of this price action, it does start to, as we see the pre-market action come in, you start to see what's happening. And this is what my bet is, again, coming through, is that, okay, we got the numbers, now what? Now what? Are we going to stop? Like, are we done? And this is half the problem right now that I've seen in the market, is that there's this idea that price is going to stop, right? That the price is just going to all of a sudden stop if a surprise happens. That never happens. You did not just hit, it's not like you just hit the wall and now all of a sudden things are going to change. I heard a lot on Bloomberg this morning, the word reset and everything else. And there's this idea, again, there's this idea that now all of a sudden things are going to change. Have we not been talking about for the last couple of weeks portfolio rotations, changes, how things are, again, speculating and sort of positioning in a way for what was going to happen here? I think it's it's not some sort of irony, but I think it's a little bit of, again, overreaction and emotional for media to continue to come out and act like the market does not have a handle on this, or again, if we go to the economist route, that the Fed doesn't have a handle on this. The negative reaction would come from the Fed being unable to handle inflation, right? If we look to history, inflation, destroying empires, right? That's where some of that's coming from. And then coming from the 60s era, where we had inflation coming into the 70s that caused problems, right? We're looking at these historical sort of settings that the time frame is completely different. The Fed, it took the Fed less than a week to implement QE when the pandemic started. Not really, even the pandemic didn't even start yet, but COVID got going February and the market started to crash because, again, everything had to close down. It took the Fed less than a week to get QE going and to pull us out of it, right? Do you know how long it used to take in the 60s and everything else to do anything? It took years, right? It took years. And even if we just look at the financial crisis, it took a long time, okay? It took a very long time. We are in a very fast moving sort of world, and I don't know why we keep forgetting it, right? The fear here is again that the Fed is not going to be able to control this sort of spike in inflation, which again it rose 0.8%. The expected was about even more than half that, right? And this is again, it's it's so what? So what? I'm saying it's a good thing. I think it's a good thing. You guys remember like less than a year ago, when the Fed came out and said they were going to look to get inflation over 2% to try to heat the economy up? And we all went, oh, fuck yes, let's go. That's going to be awesome. I can't wait. And then the federal government kept coming out and spending trillions of dollars. And then Biden gets elected, and we're actually going to spend another $4 trillion, right? And we keep putting money on and on, put it fucking burn the fire, right? Get it bigger. And that was all good. Then what are we doing over here acting like it's bad all of a sudden? The market isn't doing that, right? We have this very sort of mixed reality. And if you look at the bond market, the 10-year, which again is the major sort of traded yield, 10-year didn't move. 10-year was already priced. 10-year was already priced. When I was watching Bloomberg this morning when the numbers did come out, and that was the funniest thing because I could see Jonathan Farrow's bald head shining, and my bald head started to shine, and the 10-year didn't move at all. And I could just see him right there. He was ready to like try to put his hands in his hair, but he doesn't have hair, and it's really awkward to rub your shiny bald head. Like when you again when you're thinking and you're scratching your head, it's really awkward. Yeah, the 10-year didn't move, and so what happened? Well, we were already opening lower. Why? Because the last 2 days we've been very neutral. That neutrality actually led to us being lower, which again I thought it was going to be a little bit more sideways. So we've had to take a little bit more risk continuing to buy and buy. But we're going bid from this opening low, and I expect us to continue to do so. Now, here's what's important is we're going to go to our benchmarks here, right? What just happened? We got confirmation that inflation's fucking out of the world, right? We're doing a lot of inflation. What's going on our benchmarks of banks and energy? Well, this pullback on banks, of course, now in hindsight we can go, oh, it bounced off this 1 day pullback. What the bear market of May 10th, May 11th. Oof, it was really rough out there. We're bouncing off it, aren't we? Yeah. Yeah, and the trend's going to continue. Yeah. This was getting affected by the average, right? And it's where it's going to be really hard to look back for some of the market, because yes, things can come down and it can look like it's specific to that, but it's actually being negatively affected because of an average, right? Our banks benefit from inflation being sort of hotter than expected to get surprised everything else, right? Then why was it down? Because it got affected by the average, right? So again, you see this up almost a percent this morning. We'll see that continue. Again, banks are going to be buying back still and everything else, and yada, yada, yada. Energy, same thing, right? The exact same thing. The numbers come out. Oh, that's good for energy. If you actually look at the CPIs for energy, they're almost flat. Nothing happened on the energy side. And this goes, well, aren't prices up? Isn't there? That's just called normal economics, supply and demand, right? It's just normal supply and demand. There was nothing inflationary related to energy at all. And this is again where it doesn't even matter if there was better inflation or not. There's just something going on with what we call this idea of a super cycle. And the most obvious thing in the world is that the economies of the world are opening back up. COVID is going away, right? And we're dealing with it, right? And so banks and energy are both up. That's all you needed to see for our value trade, right? And this is where you start to look at industrials. We look at steel, for instance, that we've been trading a lot, right? Trading through X and everything else. This is again where we see some of this short-term volatility from yesterday and the day before, from just really this week. It's still leading to more upside, and this is going to continue to head to the upside. And the numbers didn't really matter, and that's why we've seen a lot of the charts that have continued to do well. it doesn't really matter what happens with the data, but they'll still get affected just due to the supply and demand of the situation, right? The activity of the market. And that's going to happen. This is when we look for charts that have their own velocity and trade on their own. I talked about it yesterday at close that I thought it was really interesting that we had a lot of growth charts making some sort of very strange moves considering in the right in the face of CPI numbers coming out that everyone knows is probably going to be a surprise to the upside, that everyone was buying those growth tickers anyway, right? Because there's a realization that some of the stuff that, again, you're pricing, I've been using the net chart because I think it's one of the just best examples on an average, is that you've had all this selling because we knew that inflation was rising and that the growth trade was, if it's growth in terms of short-term volatility and future pricing, that it was going to get discounted by inflation and it's going to cause some problems for growth. But then the day before CPIs come out, we get this bid day across this entire space on the growth side, right? You know, what are we doing here? And none of these are, they're all fine. They're all fine, right? And value's gaining. Growth is fine, right? So does it really matter? Maybe we should just remove inflation from our vocabulary. Maybe we should just remove it, right? And what have we been doing? We have been doing that. In terms of our trading, we've been trading through a bias. And our bias has just been to be a buyer. Just be a buyer. Continue to trade on the trend. Continue to be a buyer on every pullback. And that's where, again, when you look at, when we even look at things like the down movements and everything else, what have we done? We've basically just removed any dialogue and we've continued just to buy on every low through the value side. And that's it. And you're not, again, you don't need to have a discussion on inflation or anything else. It's formed our bias and we've already solved that problem. We already solved the problem, right? Anything that happens in terms of short-term volatility, those are our buying opportunities, right? We buy when there's pullbacks and that's it. It's that other side of the equation of growth that we have to actually take into consideration these ideas. But those are risk trades anyway, right? Those are already risk trades and they're actually trades that we're taking in a very fundamental different way, right? We're taking them on swing ideas and, okay, I'm going to buy these mega caps today and it may just be a day or two of a trade. It may not actually lead to much more, but if I get the opportunity to take that from the low, then of course I'll try to push it, transition it. This value side, we've just continued to push. There's no discussion here because if you start to try to produce an internal dialogue with yourself about whether or not you should be buying, then you're going to actually end up just watching the price continue to go past you, right? And you're going to go, well, I'll wait. And, well, here's your opportunity to buy here, right? And this is, again, just you can just use your benchmarks of the banks and energy sector and see how this kind of move, it's not much. It's not really offering you much, but that's the only time you're ever going to be able to really get something that you can buy on. And again, it's easy to say in hindsight, but every day it's the same thing. It's the same story, right? And even with something like so surprising like these numbers that I don't fault economists for being, first of all, they were wrong on jobs numbers on Friday, right? And now they're really wrong again on expectations. It's very volatile, the data. I mean, there's no, how do you like compare it to when you do expectations, you compare it to the year before, right? These things are so different that it's really hard. And again, like the job numbers, you're going to see a very big increase probably for May here, right? And this is where, if you actually, I think what's important to remember is like the wages went up, right? Wages went up. And that's going to continue to happen most likely. And this is just very sporadic. It's not the same. The data is going to be a little messed up. Are we going to start pricing things because data's messed up? Or are we going to just price the reality of the situation that we can all see, right? And that's where I think there's an overreaction from the media side because that's a good story, but are we really seeing that in the market at all? Again, you look at the S&P. S&P is 2% from its high. It's right there, right? Again, we're still higher than the low from yesterday. Yesterday wasn't even the day that we had numbers. We lost less than 1% yesterday. Less than 1%. right? There's a reason why we keep buying. The growth side, you still need to be, obviously, you're taking risk trades, buying the growth side. The value side, we continue to buy and buy and buy. The market's going to reciprocate that and show that, because that's what we are using a bias of buying based on the pricing, and prices are just showing that people are buying still, right? And that's going to most likely continue here. It's a question again of how do we price growth, and that's a problem that we're going to continue to solve. My opinion, of course, is that mega caps and through companies that have cash flow are going to continue to buy back. We've already had every single earnings call. Every cash company has already said they're going to continue buying through this year, right? Apple, Google, all of the megas. There's no reason not to keep buying those. It's those smaller companies that we have to be careful on and how we're going to trade them, and especially those that are they have some sort of technology that's coming in the future. There's not really anything now. Those are the things to stay away from right now, right? We're not in a situation where we can confidently go buy those. I'd rather just keep throwing my money on the things that are working. And again, I think the market has shown us that, right? We'll keep buying the things that have continued to get more and more bid because they're getting directly affected by all of this, right? And there's just no way around it, right? That's why I've been saying for months that the bank and energy thing, there's just no way around it. There's nothing you can really do to stop that move. There's just no way to negatively affect it, because by virtue of the economy opening up and inflation actually coming, and also government spending, there's just no way around it. You actually can't stop it from going up in price. Everyone could sell and the price still wouldn't change, because all of it would get filled still at the same price, right? There would be no spread to the downside. So, we'll see what, obviously we got 12 minutes, so we open up. We'll see what the market reacts in the actual, from the actual open. Again, you're going to get some selling off of the surprise, but now it's a question of, well, what do we go from here? Are we gonna just stop trading? We're done. Now we're done. Now the equity market's gonna go down. Now it's over because inflation's up. Again, what are they gonna buy? They're selling bonds. What are they gonna buy? What are we gonna all put our cash under the mattress this year? Just again, this is where you can read headlines and maybe you don't understand how the data works, but you can ask a really common sense question of, if everyone is selling everything else besides equities, then what else are you going to buy? If you're not willing to buy anything else, then what are you going to buy? You have to buy something, because like we talk about here, for us with small bank rolls, if our money's not in the market working for us, we're actually losing money. Well, right now, inflation just proved that if your money's not working for you, then you're actually losing money to inflation. You're not actually beating inflation. And you're paying the bank, which is why banks are going up. So you better get your money working for you. Well, you don't want to buy bonds, because bonds are fixed. And as inflation increases, your yield actually goes down. So that's not good. So what are you going to buy? Well, shit, I guess after a momentary pause of thinking, I'm going to probably buy equities again. And then it's a question of, well, which ones, right? We already know. And everyone's been doing it, right? This has been a process. There's been a process of elimination for quite a bit of time now. And we know, right? And I want you again to continue to look at your charts on a weekly perspective. Here you are. What do you think? Is that a trend? Kind of looks like a trend to me, right? Kind of looks like a trend to me. Let's take a look at the S&P. A little bit more volatility. Okay. Let me just chill for a moment, right? And so again, it's really easy to look at day to day, and to look at how, wow, look at this mumbled jump. Look at this mumbled bit of candles over here. You got to remember that Monday we were at all-time high. Today, we are not breaking our low, which if there was something negative going to happen, it would happen right here. And it would happen at the open. It would happen before the open in pre-market, right? People are very good at, again, if there was going to be long positions exited, investors are very good at getting out of those positions before there's going to be a problem. And again, the gap down yesterday was not really much of a gap down, less than 1%. If there was going to be some sort of negative situation here, we've been trading at all-time highs for some time. If we were going to sell off long positions, oh, we would have done it. You don't need numbers to surprise us to do it, right? And so again, let's continue to be buyers. I don't think there's actually fear in the market. It's important to I kind of noticed this from yesterday when I talked after thinking about it a little bit. There's actually no fear in the market. And I think we did mention this a little bit, that the difference that what it felt like is that before, when we were trading at all-time highs, everyone was actually fearful and scared of continuing to push price because it felt so unnatural, right? Now the economy's proven that it's doing well. Now it feels okay that we're at all-time highs, right? It actually feels okay, and there's actually no anxiety of continue to push through the high. That's an important thing to remember. And so if there is selling, it's not fear or sort of this idea of being scared of coming off the top. It's a question again of where should your money be. And so to rotate, you have to actually exit to re-enter, right? And so that's again where you can see the difference between when you look at everything, right? It's not exiting or anything like that. Whoops, trying to get the dollar. The dollar rose very quickly, again, just right around the event, and that's it. We're right back to where we are. If there was some sort of sell event happening, we know what it looks like. That means money's exiting. You don't have much of anything, right? This is not happening. The dollar is still going to push down. Again, inflation should push the dollar down, but there's a difference between sort of a costs increasing inflation in terms of monetary value, and then the latter being what we just saw with CPI numbers of again, it's the whole shebang. It's the whole economy. It's not so much this idea that the monetary or the money supply is affecting this. Money supply is again threefold from what it was a year ago. Threefold. And that is still going to be a driving force of this market, and no inflation thing is going to change the spending factor, right? Now, here's the last part of the numbers that we just saw, is a question of, well, if inflation is increasing by so much and our economists can't even map it on expectations, then do we need to chill? Does the Fed need to stop providing liquidity, $120 billion a month? Do they need to increase interest rates? And does the federal government need to stop fiscal spending? Maybe Biden wants to spend too much. That's the question, because if we are already getting inflated by so much, and the government is going to continue to spend trillions of dollars, that's just going to increase inflation more, is the Fed going to be able to handle that situation? The Fed has continued to come out and say that they can handle the situation. So who's wrong? Is it the bunch of morons that just make money off of speculation, us and banks and everything else, that keep saying, no, the Fed can't handle it? Or is the Fed, whose dedicated and only job is to follow their mandate, which is to keep inflation under control, right? Make sure people are employed. Who's right, who's wrong? And then is all the talk about how the Fed, how are they going to be able to control it with all this? Is that just some talk? Or are we just getting those rumors and things because of talk, and they want to maybe put some volatility out there? Do you really think, like, how many of you here actually go, oh no, the Fed can't handle this? You have no fucking idea, right? I don't know either. You don't actually know. When have we stopped listening to the experts, right? We listen to the experts. The Fed says they can handle it, and they're in the face of the fucking demon right here, right? Because they just got the numbers. If they continue to double down on what they've been saying, then we need to continue to have trust in that, because they're also the ones, again, that in less than a week handled the fucking financial crisis that could have been a financial crisis, but instead we look at it as basically a laughing stock of a bear market, right? They handled it very quickly. The Fed itself handled it quickly. Our government, the federal government itself, obviously didn't handle COVID very well, and that's very political. The Fed, the Reserve, is not political. They can handle these situations by the numbers. They know better. Everything else is a political question, and it's important, again, to separate the two. The Fed's role of handling inflation is not political. The government's role is political, and that's why there's a difference between the two. The Fed is reacting, okay, the government's going to be spending trillions of dollars, and they're saying it's okay, right? In terms of just their numbers, not politically, it's okay. And so, again, a lot of the media reaction is in a political way, and it's about, whoa, can we really spend this much? That's political. It has nothing to do with the actuality of the situation and whether we can handle inflation or whether inflation is going to cause the this is going to be we're going to fall from graces just like Rome did because of inflation. I'm pretty sure that was also a political situation, right? We can certainly ruin ourselves because of politics and a political situation, but I'm pretty sure the money wise, we're doing all right. We're doing okay, right? In the market knows that, right? We're not gonna. Again, this is where we can talk about these things and maybe joke a little bit about how we're the crash of the last couple days. You know very well that's not true, and that nothing has really happened here. And again, there's a lot of money out there to be spent still, so you best be buying. What do we have? Banks now. Banks, energy. Okay, we pulled off some of that bid, waiting to come into the open. In terms of what, in terms of again the risk side, again basically value I have not touched. I've only added more. In terms of those mega cap positions, I'm still up from yesterday's entries. Again, I tried to enter on Monday, got stopped out yesterday at open, rebought on the mega caps. That was it. I want to be in these positions in a long term sort of situation, but I am swinging them for points in a sort of a immediate way, and then looking to really push those further. I have all the belief in the world that when the buybacks come in, there's going to really push prices up. And again, when we talk about sort of megas, there's a very big difference between mega caps and in the overall market, and they really set the average anyway. So that's my 10% risk as through megas. If we look, let's see. We'll see how close this gets. I don't think I'm going to get stopped out here. Again, if it didn't already happen, I don't see it happening. Again, Nasdaq certainly got more beat up from inflation numbers. That's the most obvious thing in the world. And since it's so obvious, that also causes an expected reaction, right? So let's see what we get this morning. We'll chill with the SPY here this morning, and let's see what we get. Again, the other route is just to be like, well, this is one data point of data. We need more than that. We need a sort of a longer term average of data to make decisions. That's fine, but we also trade on a margin, so we don't actually trade off of averages. We trade on margins, which is every time something comes out, we trade on it. So those are two different things. Here we go, boys. Let's see what happens. Is this the sell-off? Are we going to sell because of inflation? We're all going to go, what, fill up our gas cans? Is this going to be the new season of American Horror Story? The first 12 days of May in the equity market? Excuse me, the last 2 days of. Well, I don't see a sell-off yet. Maybe we're getting game theory, guys. Maybe everybody in the world is all on a phone call right now like we are and saying, we're going to sell it all. We're going to sell it all. Or do you think they're going, oh shit, we have to buy more? What do you think retail is going to do? Do you not think retail is not looking to be on like, wow, this is quite the crisis. I'm going to buy on these lows, even though it's less than 2% from the high. Retail is going to be licking their chops here, I would say. Especially those that have been beat up on cryptos so far, unless they've been in Ethereum. Oh, good so far. Let me turn off extended hours. Banks continuing. Energy continuing. Gonna be watching for our healthcare side of things, if those orders are coming through or not. Mostly top of the list is dominated by energy, consumers, mostly energy, oil, retail, banks, steel, so commodities. Pretty straightforward stuff so far. Pretty straightforward stuff so far. Whoops. So we're basically break even on the Dow. Almost almost you can say break even to yesterday on S&P so far. Nasdaq's the only thing that, again, it's at the same low of yesterday, but we're really watching just for this space to see if it gets bid or not. I think what's important to still note is we have some bids still here on gold, and I think the move here to start is interesting. So again, when you get some bid like this, we are watching to see if gold is going to finally break out of this trend here. It's already rolling, but that can definitely be, again, just the neutrality leading into CPI numbers, and then we get moving. It's an interesting sort of situation, and we'll see if it gets linked up with Bitcoin here. Whether this is gonna make a move, and I just don't know. So we're still watching for some of those things to make decisions. But overall, this is a nice candle here to start. And when you look at when you look at these things, I mean, it's yeah. Stop thinking in days. Start thinking in weeks, months, years. Right. Before I talked about stop thinking in like 10 minutes from now. What's it going to be like at close? What's going to happen at lunch? And I told you to think in days and, in a couple weeks of time. Through everything that we've been trading through right now, it's really important to go from that maybe shorter term in the weeks sort of department, which some of you maybe you are thinking day to day. So I'm really talking in terms of stop thinking about what's happening today and think about tomorrow. But it's time to start thinking in months and years, right? You gotta start thinking in a year from now how your portfolio is reacting, and because again we needed to train in a very short term sort of way because of COVID and what was happening in the market because of volatility. You gotta realize that all the data you're seeing is lengthening out your horizon that you need to look at. You no longer get to have that ability to go make 100% trade from one day to the next with a significant amount of money. It's not happening anymore. You need to start to really push that out and think about, if you're serious, right? If you're serious and you're not just gambling, then you need to be thinking in a longer term view. And I would say years, a year from now, at the minimum, right? And it's not easy to do that, but some of you have never done that. Your only experience so far has been here, and we're dicking around with swing trades that they weren't gambling when we made them to go make like 100% swing from a technical standpoint. Now it is. Now it is. And if you don't know that you're gambling, that's probably rough and probably why you're losing money. So again, there is a significant difference. So we're very much out of the, I'm going to buy some calls that expire in 2 weeks. I'm going to buy some calls that expire in less than a month here. Yeah, there's a reason why you're losing money, right? That's not not going to work. You're just picking up someone else's trash at that point, and you're not very good at it because you can't be good at it. It's literally the deck is stacked against you there if you're buying shit like that right now, right? And that's where when you look at things like the growth side that is risk heavy, if you're betting on Apple to go up, why are you betting on it to go up in the next month? Why aren't you betting on it to go up in the next year? That doesn't make any sense, right? It doesn't make any sense. A year ago, it made sense. A lot has happened. A lot has changed, right? Why do you think we're trading the dirty Dow? The most boring fucking index in the equity market. We're trading banks and energy. We're fucking normies, guys. You guys are long-term investors now, and I don't mean in the bag-holdy way. Volatility, we'll see. If we get some hold up here, I'm not confident that this is going to hold up here at all. Again, it is nice that we have a reaction to numbers, but this has done nothing to shift anything. So we'll need to see if we get a sustained level of volatility. I have zero confidence. Again, it is just not going to stay up there. There's not even a way to short it, right? It's spot VIX is elevated, but there's not even a way to short it because it's already shorted. The supply's already there, so nothing we can do. Nothing we can do. Why do I keep doing that? Fuck. See how bid we get here. In terms of individual tickers, it's very much sector based still. So again, the tickers you're choosing are very much just based off the sector, not based on itself. Nothing really to point out in terms of lows to be buying on. Again, it's really there's nothing there. There's nothing to choose from. So I don't really have any risk to put on any of those tickers. Again, we had some tickers yesterday, put on a lot of points. I'm not going to get baited into those until we get some sort of, again, consolidation or some sort of shift in mentality. Maybe retail will come in and want to buy up all the shitty growth tickers that no one else wants to buy. That might introduce some short-term plays that we can do, but otherwise, yeah, let's hang out. We've got it right. We'll see. We'll see if the EVs and stuff come through. Again, Neo got beat up, but then you get the candle yesterday. It's all the same across the board. It's just not a trade that you should be thinking about. We're gonna look at it, but the other thing that I think is gonna start to creep up a little bit, that right now there's the argument going on at the politically, Republicans are bringing up about sort of UI benefits, and it's like, well, if wages are increasing and we can't get people to go back to work, it's because of, obviously, we're paying them too much. We're paying them too much to stay home, right? Now, when you look at the numbers and you start to look at unemployment and shit like that, this is where, how do we handle this situation? Do we handle this politically or based on data? Do we start putting people's lives as numbers, or do we think about them in a qualitative way of, well, this person doesn't want to go work a job that's minimum wage of $7.50, and of course they'll stay home, so of course there's vacancies. Do we play it as in, no, you better go fucking work that minimum wage job that makes less than unemployment because we need you to? It's, again, this is a question that's very different and it's political. It's I think fucking stupid to even ask the question of why someone would go work a job that makes less than they get on unemployment. That's fucking stupid. And if you don't agree with me, then go fuck yourself. Don't care. You shouldn't force people to go work for less money than they can make being unemployed. That's stupid, right? That's completely stupid. And so we've already shown that, again, if you can't afford to pay someone $15 an hour, then your business sucks. Your business actually sucks. Because if the person that works at your job that you pay $15 an hour, right? You pay someone $15 an hour, okay? And their revenue is less than $15 an hour that they produce. If they produce less than $15 an hour and you have to pay them $15 an hour, so it means you don't profit because of that, then your business sucks. It does. It does. So Makita says they need to provide a return for what they're worth. If they can't provide a return for more than $15 an hour, then your business sucks. That's the truth. If you hire me for $15 an hour but I make you less than $15 an hour in terms of return, then your business sucks. And you're going to cease to exist. And guess what? That's already happening. Because you know why? Successful businesses can pay their people more, and they have. Why do you think every major corporation in the country has now started paying their workers more than $15 an hour? Whether it's in Louisiana, whether it's in the shithole of anywhere in this country, they still make more money than that. They're just taking some off the top, right? That's a political and a people problem. It's not an inflation problem or anything like that. Wages increased 0.07%, what we saw on Friday, which is showing some of that, right? But it's really, again, a situation that COVID affected those businesses. And so this is where, again, you have to keep people on unemployment because what you're doing is, again, causing a problem with the data is not telling you to go stop paying people so that they have to go work a job. We're already seeing that things are opening up and they're making money. This is, again, a situation of things have changed a little bit here. You got to wait for everything to get back to some sort of average before you start to look at some of these things in a way that goes, well, in some states we'll have to remove unemployment and some will keep it. When you start doing that, you're starting to, again, you're picking and choosing, and it becomes political in a way that doesn't need to be. But it's a problem of, if you think of inflation, this is where politicians are just flat wrong. If you look, you could make $3.50 working at Burger King fucking like 40 years ago, right? If you adjust those old wages for inflation, it's not even close. I advise any of you that don't believe in $15 an hour to go look at what minimum wage was 30 years ago, 40 years ago, and adjust it for inflation. Why do you think boomers were able to afford a fucking house, college education, and everything else on minimum wage? Because adjusted for inflation, it was 10 times as much. Makita says no high school student should be paid a living wage. It should be adjusted for inflation. Okay, adjust it for inflation. We just saw inflation numbers. I advise you to go adjust for inflation the numbers. You just saw that the cost of living is going up, but the cost of wages have not gone up. And guess what? Productivity has skyrocketed. Productivity is up 30 times. 30 times. That doesn't mean a 16-year-old needs to make $15 an hour. What do you think there's more of? Do you think there's more 30-year-old dudes that make minimum wage or 16-year-olds? You tell me which part of the labor market's larger. How many 16-year-olds do you know that are actually taking jobs from adults? You let me know. And it's like saying food stamps. We shouldn't give food stamps because some people take advantage of it. Some people don't need food stamps. They take advantage of it. So we should not give millions of people food stamps. $16-year-olds getting paid $15 an hour are not taking jobs from adults that make minimum wage as well. That's not what's happening. We can act like it is, but it's not what's happening. The numbers disprove that. You know why? Because if you're 30 years old and you don't have a job, and you can't get a minimum wage job because a 16-year-old takes the job from you, a 16-year-old has to go to school, they don't work full-time, then there's obviously something else wrong there. And it has nothing to do with the wage. Are you more willing to pay a 16-year-old $15 an hour or someone that has a resume $15 an hour? Those things are not connected. It has nothing to do with $15. That would be based off of the current minimum wage. Maybe we should just pay 16-year-olds $7.50 and we'll pay a 30-year-old $15. Maybe we should do that. So again, you see how this is more political. This is why we're going to get some reaction to some of the numbers, and it's very important the government does not go on the sort of quantitative side and try to go, well, we have inflation going up. Maybe that must prove that the economy is doing better. So we need to stop unemployment benefits. We've already proven, and the Fed has continued to double down on the idea that that's actually incorrect. You actually want to overheat more instead of going under, because again, we're trying to help people that are actually suffering still, right? They're actually suffering. And they're better for the economy. Guess what? It's better still if you have someone lazy, staying at home, spending their money from unemployment. It actually benefits you and I a lot more than for them to have to be forced to go do something that they don't want to do. They spend money and that helps inflation. They go throw their fucking $1,200 check into Dogecoin, make money. These things cause inflation. They go buy new shoes, causes inflation, helps everybody. But yeah, the wage thing is fucking stupid. We have not raised wages compared to productivity anywhere close. It's just not even close. So for inflation, it's not even an argument. It's not even political, that argument. Even though we should be helping poor people more. It's ridiculous. Ridiculous. Rising wages are good for the economy, yes. We're the greatest country in the world, but we can't pay our people. And we think it's a people problem. People are more productive than they used to be, whether they're lazy or not. If my productivity goes up, but you won't increase my wages, then guess what I'm going to do? I'm going to decrease my productivity down to my wage. I'm going to start being fucking lazy. And I'm going to tell you, fuck you. I'm not going to work for you. Why do you think there's signs on doors that say, "We need workers. No one works for us." Are you going to go work for them? Of course not, because obviously there's something wrong with that business, right? There's something wrong with that model. I don't hear any of the big companies, I don't hear any of the most profitable companies in the world complaining. I don't hear any of them complaining. You can go, well, they don't get charged taxes. True, they should get charged more in taxes. Yes. But the reality is that if we pay someone more, it doesn't affect you and I. You and I do not have to pay more taxes because somebody else is getting paid more money, a living wage. But yeah, again, a bad business is one that does not make more revenue than their cost for employees. So for sure, that's already pretty straightforward. Again, this is some of the least amount of reaction I've ever seen the market do in terms of data coming out. What are we doing here? We had more reaction. Last week. Let's see. It's almost like we're gliding. We're gliding. Energy just keeps going though. Energy banks. See what this bank move is. Still up 35 basis points. These two are completely opposite to each other. When prices go up 25% at small businesses, don't complain. What small businesses are those? Restaurants? So when I go to a restaurant that already doesn't actually pay their employees minimum wage, they actually pay them as cash employees, it's going to cause a problem for me. Fast food. So fast food now, okay. So you think fast food. You think an employee doesn't make you think an employee does not make a fast food chain more than $15 an hour revenue. Do you think a restaurant does not make more than $15 from its employee in an hour? Do you realize that the same people that are getting paid to work at a restaurant are also consumers themselves? And with more money, they will spend more at those same restaurants. The problem is that they have to spend all that money on living. And so then they don't have enough money to go out to eat. So then those businesses don't have enough customers because the small ass janky town they live in doesn't pay enough. And so then those people can't spend money at the fucking small janky restaurant. And if they just paid people more, then they'd actually get more. It's called investing in people because people are the lifeblood of the fucking country. Maybe the military should start paying people $7.25 an hour. Oh, fuck, they do. Maybe we should say fuck it. And you know what? I'll tell you what. The US military budget is just under $1 trillion. I say fuck it. Let's cut that in half and start paying those fuckers $7.25 an hour across the board. You'll die for me. I don't give a fuck what you get paid. I'm getting paid. I don't care about you, 16-year-old, 17-year-old. Does anyone have any ticker that's actually surprising this morning? I have nothing. Nothing. I'm watching semis very closely. Watching this very closely. But other than that. And let me just be frank. And I don't mean frank as in a name. The only people that make the argument, okay? And this is not to hurt McKee's feelings. This is for everyone because there are other people in chat and everyone else. The only people that make the argument that we should not pay people a living wage of $15 and then make up excuses are the same people that have no fucking clue what they're talking about. They have no idea. Never were educated on it. They actually don't know the numbers, and they don't actually know the outcomes. They have no data to back up what they're saying other than a qualitative idea of themselves, of someone else shouldn't make $15 an hour, especially if they're 16, because that's close to what I make. And I find that disgusting. Those people say. You actually look at the data does not prove that. The data proves the exact opposite, which is why we're going to do it. There's nothing anyone can do. People can scream and shout, and people in bumfuck America can complain all they want that wages are going to go up, and it's not fair to them. But the reality is it's going to happen because it's the best thing we can do. And people complain about socialism, anything they want. Those are the same people directly benefiting from socialism. The same people that complain about someone getting a living wage are the same ones that got stimulus checks and actually got unemployment benefits during the middle of a crisis. They're the same ones that lost their jobs that will complain. That's the reality. So Mickey's is saying, so inflation has gone up, so prices have gone up, let's say 100% over 50 years, but minimum wage hasn't changed with that inflation. How will increasing those wages to, let's say, equal to that of inflation of the prices cause a trickle-down effect of an increased prices of goods? How does that do any good besides causing higher taxes to go to the government? Let me tell you what it does. That person that's making the same minimum wage, as prices around them go up, they have less money to live. Prices around someone is going to continue to go up, but they're not getting paid more. They're producing more, but they're not getting paid more. So prices keep going up, but my wage doesn't change, but I'm producing more. That's why prices are going up. And someone keeps telling me that, well, we're not going to increase your wage because that's how it is. And I'm telling them, well, it would do good. I should get a raise. Do you know why I should get a raise? Because I produce you more and prices are going up. And guess what? I can't live. I can't support my family. I don't have enough money. I'm stressed. I've turned to alcoholism and drugs because I don't have enough money and I see other people get to buy things and do things they want, but I don't have the skills to go to school. I don't have the skills to work a more technical job. And so this is all I have. And I'm one of 10% of the population. 10% of the population that doesn't have the ability to do those things. And maybe they just get fucked on being born where they are and to the parents they were born to. And guess what? I'm fucking stressed out of my mind. And there's no one here to help me. So you know what I'm going to do? I'm going to start fucking drinking because I'm fucking sad. You know what I'm going to do? I'm going to buy a fucking gun. And you know what? I'm so fucking angry that I may just go to the Walmart down the street and fucking kill a bunch of people. That's what I might do. I lost my job again, and I have to go fucking work a shitty job, and people don't think I should be paid. So I'm going to just go fucking kill some people. That's what happens. If you don't think that's what happens, so you know what I'd rather do? I would rather pay those people money to make them feel a little bit less stressed because it's 2021 and people deserve to be fucking recognized. Makisa says, how many times has that fucking happened? Are you joking? You've got to be kidding. How many times have we... Oh, boy. Oh, God. How many people have died in the last year from shootings or from fucking overdoses? What do you mean? What's going to happen when 3 million truck drivers lose their jobs? What's going to happen? If you don't think we need to pay people enough money to be just content and to live, then a lot of bad things are going to happen. Maybe we should all move to the ghetto. Maybe we should go live in a very poor area. Do you know the difference between living in a poor area and a nice, comfy little... But that's the difference. The difference is how much money you get paid. People that make minimum wage live in a shitty area. They don't live where I do. They will never get to wear this Vicuña sweater. They'll never get to live in this building. They'll never get to live in my neighborhood and know what it feels like to be safe. And they'll never get the opportunities I have just because I make enough money to fucking get up and move to where I want to go. Anything else. If you pay people enough money, it causes productivity to go up and it causes happiness to go up. How hard did I work to get where I am now? I work just as hard as the person that works at McDonald's does. I'm just fucking smarter. That's it. And I was born to a well-off family. And I look better. I work just as hard. I don't have to work as hard because I get paid more money. Shouldn't you be rewarded for that hard work? I am rewarded for that hard work by being a millionaire. And I work just as hard as someone that's poor. How is that fair? You're telling me we can't raise minimum wage to $15 because I get paid more? The argument doesn't work, buddy. It doesn't. Pushing minimum wage up will not affect small businesses. It'll affect the ones that fuck and suck. If you have a bad business and you can't afford a raise increase on a few workers, then your business sucks. That's a reality. I don't see anyone else crying. Maybe that'll mean there'll be larger corporations, but guess what? We're already there. We're literally already there. Maybe Walmart. What do you think happened over the last 60 years? Walmart's already eaten up all the other retail stores. Restaurant chains are already a thing. Guess what? They pay their workers because they make enough money. It becomes a part of the baseline. We can act like there'll be a difference between the day it happens and the day before. Sure. There might be a bit of a change in profit, but we're not talking about one individual company. We're talking about the entire United States of America. I'm not talking about just one company. I'm not talking about just one person. It matters on an individual level. But we're talking about an entire thing, right? And by doing so, it'll positively affect everything. Look at this is where the argument really doesn't work. Is look what we just did during COVID. We paid people more money and look what it did to the economy. By just paying people paychecks, giving them more unemployment, they fucking spent a lot of money and it was good for us. Our taxes didn't go up. We should tax the wealthy more and corporations more so we can continue doing that. And those bad actors are very far and few between. Those that take advantage of unemployment, don't work, they're far and few between. We've proven that through data. We've already proven it through data. Even when you're offering to pay people just to stay home, people want to work. They want to go do things. There's a few that don't. Fuck it. Who cares? Doesn't affect anything. Doesn't affect anything. Okay, this energy move's really getting picked up again. I think we can chalk some more rotation through. Banks coming back from a low. What I'm curious in is on this side of commodities, how much more this is going to pick up in relation. Maybe we should focus a little bit on this side with retail stores. The numbers were very good. And we actually have retail sales on Friday. If there's opportunities on some of these tickers, I'm going to be looking to pick these up, swing them to Friday. We'll see. Obviously, energy is doing as well. Nothing really comes to mind in terms of adding on to industrials. This is the other side. This is the other side, the food and beverage side. When we talk about some of these larger end companies, things like Pepsi, we talked about K. The kind of moves that we've had here, some of these, I got pushed out of some of these positions in some areas. Looking for these on opportunities. Also, automobiles are based on, if you saw, the largest change was used car sales prices have gone up. You know what that causes? It causes new cars to be bought more because used car prices are going up. So it costs more to buy a beat up car in terms of increase than new cars. New cars are also going up in price. But this is where things like GM, the chart we're looking at, we're still trading on this trend line. I mean, are we going to get it lower than here? I don't think so. So even a ticker, even a candle like down here, are things I'm looking at that I go, okay, the numbers are proving that this shit is going up. And we know people are spending more. People have money to spend. Very fundamental idea, but we're trying to think through a little bit more of a long-term investor approach for a macro side. We're going to trade it up the technical here, right? We're still going to take it from there, but I think when you look at some of the macro ideas, you do see a chart like this paying to this idea. Again, the biggest question right now is the timing in which the market reacts to some of this stuff. What's the timing? Like how does this consolidation right here finish off? How does this, again, how do we get across this line? Is it right here? What's that? That's 1 day, 2 days. That's a pretty aggressive. So what about this? That's by next Tuesday, Wednesday. That's a little under 2.5%. You start to look at it, we're pretty close. We're pretty close into some of these ideas of this is a low. And that's why we're going to continue to take this trade even on the NASDAQ side that we know is getting beat up by inflation. We're going to use mega caps. In terms of value, I think this is pretty straightforward. We're holding this range in here, and again, we're seeing energy. This is the biggest thing to me, is that energy did not increase because of inflation. Completely supply driven. All supply driven. The demand is coming in because of COVID, that we can actually we actually can understand the demand a little bit more than the supply side. And most of inflation and employment, like the employment numbers from Friday, are supply side. It actually just has to do with supply, not so much a demand factor. Because we can actually track demand a lot easier right now, because we know what we're at least going back to, and then we can actually go from that number of break even from previous demand before COVID to an understanding of, okay, here's how things have changed. Here's the difference in sectors. See the demand. Energy, we have a very good understanding of demand. We actually understand where it peaks very much. It's all supply, right? Energy going up right now, specifically the oil side, is again not related to inflation. It's not. Inflation, if you look at the numbers this morning, completely break even on energy, on oil and everything else, right? And so again, when you see this, it's a lot more bullish that this is happening comparatively to, in terms of timing, right, than to other things, right? Which you can relate to banks a little bit. Banks are completely based on inflation right now because of, again, a rising interest rate. This, this is still bullish, but you can see the difference. And so when you start to put this into perspective everywhere, maybe we can understand a little bit, again, some timing. This is a good spot to buy. It's going to be a question of how quick. I would say these are our lows, though. So you need to buy. Don't think that's going to move forward. Do want retail stores, I think. The FL trade's been fine, very good, but again, we're talking about the next move. Travel, I talked about travel yesterday. Again, you have the short-term volatility. The move is reacting to an average, and that's what short-term volatility does. It gets exposed to everything. It gets negatively affected by the average. You look at a lot of what's going on here. Everybody knows that travel is going to come back, right? It's a question of timing, and how do you want to price your investment here? I don't think there is an understanding of timing, and you don't get to go, oh, okay, well, here we go. Now we're going to trend to the upside, right? That's like even here. I take this trade, and then we come down, get stopped out, could take the trade again, right? These sort of things, this is the risk that I want to be involved in, because it's, again, a macro idea that it's a no-duh sort of situation. And we should still, I haven't said it yet this week, best day to enter was yesterday, right? We're going to continue to use that, specifically through value, because it's the honest truth. With inflation continuing to increase, every day that goes by, prices increase. So is everything else that causes price to go up, right? It's just not here in front of us. Not everything happens in the moment. This is where you need to be thinking longer, right? Not so much day to day. And that's, again, where is Apple not going to be worth more in a year from now? Well, everyone knows Apple's going to be worth more a year from now. Okay, then why don't you trade it for that? Trade it on the given, and then we'll react in a more technical way in a shorter term, right? Which means you get stopped out every now and then. You're going to transition every now and then. These sort of things are more technical, and we can use that to we're using technicals to min-max our positions, but we're using the most obvious macro reasons to continue to be long and to buy on dips, right? Most obvious reason to buy value is, well, money's going to keep being funneled into that area because fiscal spending, right? $4 trillion. The Fed, okay, well, value is going to keep appreciating because of that. We'll just trade it technically to min-max it, Every time there's a pullback, we'll buy more. Every time we see something consolidate, we'll take profit. And you continue to go through those motions, right? But all of it is still one way. Also, in terms of the pharmaceutical thing, we haven't really seen much of a change still, so we're definitely waiting on that debate to get solved, or at least come to a conclusion. I think that does prompt a bit of a long or short trade, whichever way it looks like the market wants to basically price that, whether or not the temporary, again, lifting of IPs is actually going to cause some long-term understanding. It's consolidating in such a way that, again, this, when I talk about like a debate of whether this is whether this temporary IP ban is going to be good for, or IP lifting is going to be good for prices or not on the equity side, the market through consolidation is deciding that, right? It's like uncertainty, and then once something's, again, whether this starts to break out or break down, then a decision's being made. So if I see this break out, then I'll start to put on a position that's very similar to my idea over here, and that's what we're looking for here. So you do have, it's basically the tightest candle we've seen so far. Is this a breakout or breakdown? Right now, it's most likely to the downside. And so this is where short opportunities do come in across the board here, where when you look at something like this, you know, again, you're in a situation where this could certainly just be a breakdown, and you could trade it for that. I'm not sure I'm going to do that, but that's where we're at. So you break one of these, then decisions are being made, right? And because, again, for something like that to happen where you have tightening that then leads to more momentum one way or the other through a breakout or breakdown, then that means long positions are either being sold or bought. And that's called the market making a decision, right? On sort of this event that is sort of random, but understood. And it's not so much surprises or anything like that. It's just the timing we did not know. And so now we need to price it based on that. And whichever way it goes, that's going to be the decision the market makes. Again, where we react to prices and not, because again, I have opinions on how I think. I think it's the right decision to allow more vaccines to be made. The price going down on the equity market is not showing that that's a bad thing, right? That's, again, where we're just going to look at price, because whether we think it's good or bad, the price is not going to move based on that. Prices going down does not reflect a negative policy decision, right? And we can see that everywhere, right? Well, I don't think we should lift IPs because, yes, it's going to save people's lives, but that company, they're just not going to make as much as they would have. And that's just not how capitalism should work. They shouldn't have to work so hard to make a vaccine and then not get paid for it. Or at least not as much. You know, they could have got a 10,000% return. Now they're only going to get a 9,000% return. I don't think other people should be able to make the vaccine, even if it's going to cost American lives and people's lives in India. And you know what? Yeah, kind of sad. You know, it's kind of sad that I had to pay more taxes this year because I had to pay people's unemployment benefits and send out stimulus checks that may have actually saved some lives and some heartache and stress. I think that extra bit of taxes I had to pay, I should have kept because I worked for it. Because I had the luxury to work from home. And I should still be made, I shouldn't have to pay more just because someone else lost their job. I mean, it doesn't matter that it was a pandemic related. I don't care. They should have found something else to do. They should have worked from home and traded stocks with all the money they don't have because they work they work a minimum wage job. They should have traded stocks and got lucky like I did, where I got lucky from the start of COVID, so I could do it. They should have known better. Handle that situation better. Because fuck, man, that extra bit of taxes. I don't know if I'm gonna be able to go on vacation this year. Those extra taxes really got me. Kind of makes me really sad. I do pay my intern minimum wage, by the way, $7.25 an hour. In terms of productivity, she probably gives me, let's say, I mean, it's hard to even price it. It's priceless to be able to sleep more. But you know what? I actually don't think I can afford to pay her $15 an hour because it's honestly at that point not going to be worth it. So I might as well just fire her. And because the extra $7, I just don't think makes sense for me. It actually just doesn't make sense for me to pay her an extra $7 an hour. Like, I know that she's a college student and she does need a job, but the $7 extra I just don't think I can afford. Like, honestly, I think it would just be too much for me to actually afford. So I'm not going to pay her that $7. Now some of you will say, "Well, Logan, listen, man. It's just an extra $7 that's going to really make her life better. Does it really hurt you that much? Don't you make a lot of money?" You're like, "Well, yeah, I make a lot of money, but that's $7 I want. I want that $7. Because that $7 an hour I could use to go to fucking, I don't know, Starbucks, get a chocolate croissant, nice coffee, you know, and for her, maybe it's the same thing and she can just use her other money for that, right? I want to use my other money for investing and going on trips to the wind and gambling all my money away because I have enough, right? She should just make more. But I'm not going to pay her more. Do you actually pay her minimum wage? New York City, the minimum wage is $15. The only places that don't have $15 minimum wage are literally shitholes. I'm just kidding. Not shitholes, but are not cities. Cities right now in the United States do pay $15 minimum wage. So do restaurants. Those of you that want to argue, I was a GM of a bar and we already had to raise our minimum wage to $15 an hour. That already happened years ago, even when I was still working there. So minimum wage did change to $15 an hour in cities. And guess what? It really affected our margins because do you know the margins on liquor? We sell a cocktail for $15. Do you know how much it costs us to make that cocktail for the $15 that we get for it? About $3. And most of that is from the employee wage. Because do you know the returns on liquor? It's fucking disgusting. It's about 100 times the cost. Technically, the average is 75, but that's if you just do it poorly. So again, yeah, it really hurt those. That 15 really. You know what I did when I was a GM at the bar here in Midtown? I actually, when we had to increase our dishwasher's wage from minimum wage up to the $15 minimum wage, you know what I did? I fucking fired the dishwasher and started doing the dishes myself. Because that extra $7 cut into our fucking profits. To hire one dude to do dishes. How many people do you think you hire for these places? There's only 2 people maybe at every single bar that works for a minimum wage. Your bar back and your dishwasher. Usually the bar back does both. Unless it's got a kitchen, so then dishwasher. Line cooks are obviously getting paid more than minimum wage. Bartenders getting paid cash. Waitresses get paid cash. I guess you could pay cleaning staff minimum wage, but they're only there for a few hours. So you're going to probably pay them more anyway. When you start to look at it, and I've worked in that business and had to do my cogs I never thought about what it was to pay my employees more because it has nothing to do with that. It has everything to do with how good they are at their job. And yeah, tip outs, again, tip outs and everything, though, that's nothing to do with minimum wage. And you can go, well, that's New York City. Of course, you guys make more money. It doesn't cost any different, though. Costs are still the same. But didn't you hire immigrants? Should we really be paying immigrants more? Oh, makes me sick that we have to pay immigrants more money. Ugh. I have to pay an immigrant $15 an hour? That's just fucking gross. They're taking our jobs. Well, I guess now we'll really get to find out. Because if I have to pay somebody $15, I'm not paying an immigrant. Well, let's find out. Are we hiring immigrants because we pay them less? Or are we hiring them because they work better and they produce more? If you got cut early on the shift, you didn't get tip outs. They'd play favorites who they'd get cut and pull some bullshit. Like try to cut you an hour before close for night. I can see that happening. I can see that happening. That's usually because bartenders complain about doing tip outs. It's like, oh man, you only made $750 tonight, and you have to go pay your bar back $50. Oof. Who kept everything running and kept getting you ice, cleaning up your fucking mess all over the bar. Oh, you needed more liquor. Had to redo the keg. Had to change the keg for you. Oh, too much to pay them. Oh, right. Yeah, that whole process is silly. It's because people are shitty. We're all shitty. We literally all suck. Like it's so bad that we don't care about anyone else but ourselves. I'll be the first to say it. I don't give a fuck about any of you, but I still think maybe you guys should make enough money. But it is true. Like we all suck and shitty to each other. Just to get ahead for $1. Just to get ahead for $1. Again, I'm the first to admit it. Just to get ahead for $1, I'll sell someone out. It shouldn't be like that for people that don't have money. Sucks, man. I have people in my hometown that it just sucks for them. You live in the middle of nowhere. Like there's just nothing you can do. Like there's just nothing you can do. You have no ability to leave that place just because your family doesn't have money. And just because you just yeah. You don't have enough to go to school. You can't do anything. You're just stuck. Stuck in your hometown forever. And then you have people like me that are assholes that just yeah. It's not fair. Should work harder. People work a lot harder than I do. People really work a lot harder than I do. I can take any day off I want. I could take a whole year off. I could move. I could do anything I want. Okay. Mm, TTM got rejected intraday on 21.95. I'm not sure how much this actually matters. This does not trade intraday very much. And again, I think inflation just keeps pushing everything on this side. I don't think that's a sell or take profit. If I had $10,000 and I haven't invested in anything, if I had to make one trade, I had $10,000, I had to make one trade, and I haven't traded anything at all. First time investor. Where would I put my money? What was that one trade I make right now? And let's say I want to make this trade not to just sit in a long-term investment. I want to make that money now. What's my best case? What's my best probability to turn that money, let's say, from 10,000 to double it? How could I do that? What would be the trade that, hey, may not work, but what would be the highest probability that I could double that money? Maybe more. What would be the trade? I'm trying to think through the eyes of a retail trader right now. I really think it's things like this here, like Apple. It's just this here. I think this move, it can be one of two things. It can be the average velocity, it can be the average, or you get an event where everyone goes and buys calls and it goes up a little bit faster than it was going to do on an average. We know that it doesn't take much. And when those buybacks come in and it causes those calls to start to be in the money, I think that as a retail investor, you're looking at this sort of thing here. I don't think you're looking at, I mean, you are looking at Tesla, but again, I think this is a little different still. You're looking at things like here. So I think we got that right. So again, I mean, I think retail is still going to be a little finicky in buying some, we look at things like Plug and Blink here. I think they'll probably still be buying some shit like this and trying to buy things off of a low. Probably buying things like Zoom and shit like this down here, which we've talked about. We wanted to get in through here, but then we got the downward move, so we've really removed this from our look. I'm going to keep our eyes open on the option side for. I do think retail is going to get back into equities. They've gone crypto. I think they're coming back to equities. I think Doge probably gets smacked further, and you get some of that new money. And Bitcoin has slowed, so there's not really much more buying going on there. The GME thing has fizzled out. Retail is going to come back, I think, into tech because they just don't know better, and because tech is down because of inflation. So as soon as that starts to happen, then all of a sudden things start. Again, they could be the ones to start to move it again. So we'll see. Otherwise, I mean, the most obvious money is to keep putting it through the value side. I just don't think you're going to get. No one's getting 100% fucking return on value. It's not going to happen. I mean, there are areas like you can keep trading. Like the X chart has produced that, but that would, I guess, be like the 10,000. You get 10,000. I just keep putting it on the X trade, right? These sort of things are, I guess, the situation that's most obvious through the value side, but I'm not sure retail is so much looking for that. For us, yeah, we keep doing this. I think even some of you would probably have gotten pretty close to 100% on banks even. Off of this move, pretty close to it on energy. This move here is probably the exact same thing. Any new money that you put on here, probably, most likely, is pretty close. I think what we did with healthcare, that was a pretty nice, that was 100%. Maybe retail comes back into some of the bio stuff because it's down, but everything else can be trading on a pretty average velocity, so it's just not enough The thing is here, right, is that we've gone from very high volatility, which will double your money, to very low volatility. And everyone's just trading low volatile sort of tickers. When things don't have much volatility, you're not getting paid a very big exponential on contracts. No matter what you do. And that's why we need to be very understanding that. Okay, well, I know that. I'm just going to keep pushing, transitioning. Take what's in front of me. Much as we would like there to be volatility. But, who knows? Maybe this is going to come fucking crash down to zero, right? Maybe everything just sells further. Do people have in mind? A lot of action on the dollar hasn't amounted to much yet. There's intraday movement, but again, it's all around the event. Question is whether or not you get something. Nothing yet though. Podvex is increasing right here. Now on here. Oh, XON is on NASDAQ. There we go. Oh, baby. Look at you're not even moving on megas. Barely. It's just Microsoft doing the same thing it did the other day. Energy leaving the way. Oh, let's see. Now we're getting into whip. We're getting into the whip area with volatility coming up. Buying on fear. Let's see, we're close to. I'm getting close to getting stopped out on this again. I'm gonna hold it a little bit further on a little bit of an error. If there is something cheaper, then I'll buy it. There's some things on the value side that we actually can transition and buy on a little bit. If we start to look through some of these, you look through HON, pretty spot on area to go buy through. When you look at things, not CRM, when you look at things again on the mega cap side through the Dow, Microsoft here, it's a bullish candle right there to buy on. HD, we talked about how this has been a straight line. This is your first sort of opportunity to go get that new buy opportunity at some sort of low. Again, you don't get to choose when the low is. We can wait for the breakout. You absolutely can sit here and wait for some sort of candle to go to the upside, some higher low, higher high. Again, we're in a very different bias right now. So usually, a month ago we would have waited. Right now, I'm willing to get stopped out multiple times to go take those trades because they are significantly different. Buying from that low to waiting for a breakout, you're talking about 100% trade almost right there. So when you look at some of these in the face of adversity, taking those trades will pay off if the upside is here. And again, I don't see a world where Equity market doesn't keep going up. I don't think any of you do either. But the pricing is there for still you're getting the pricing on the options that it's coming down by enough that it's worth it to take that risk of buying when prices are coming down. It's just actually worth it. Take that trade. I'll get stopped out a few times. I have no problem with that because you know the upside here. You just know it. We're barely off the high, right? And we know what's been leading into this area, right? That's the biggest thing, is that we know what has led up to this point, and we know the reactions. We know everything. It's very choreographed. Everything we've had, right? Don't change the tone. Oh, I didn't see your question, Ecto. For bouncers, I just hired through a security company. Well over minimum wage. Well over. A little rowdy here in New York, anyway. A little busier. I think it was. I think the I think the hourly rate was like $32. But they would get paid more than 32. It was like, if it was for 4 hours, 5 hours, just depended on the hours. They would always get paid basically the same amount in flat. And then it's really for events. Events are what security makes the most money on here. So they get paid a lot for that. Normal nights, $32 or so. It's always hard to tell how big of a problem it's going to be night to night. Midtown's pretty chill, but we have a lot of Irish. Irish bars are pretty rowdy. Most of the time, though, I can handle. Like, the problem used to be is that even then, it's like, okay, 30. You want to save that hourly rate if you can, because it's like some days, like a random Tuesday, I'll be like, okay, I don't need a bouncer tonight. I can handle it myself. Me and the bartenders can easily handle any problem. But then it's always when something happens that you're like, fuck. I wish I didn't have to deal with this right now. Hard to tell. That's where, like, it's so hard to tell how much you need to. You can never sum it down to the numbers. Learned anything? The numbers usually do not tell you the full story, because a lot of times it's just about efficiency and ease on, like, the mind and stress. Removing stress is priceless in a lot of situations. And just having extra staff on, right? That's where, for tip employees, it sucks when there's extra staff on, right? You're a waitress or a bartender, and there's extra waitresses or bartenders on, and you're making less money because of tips. That's when it sucks, and that's why it's unfair. Because, again, for the business, they want more people on. I'm willing to pay another employee $15 an hour just to make it less hectic and give better service, right? And that's where these numbers don't add up, because managers are willing to have more staff on. The staff don't want that, and that's why it's such a lie to act like we can't do it, because it does help. You can say that the cost went up, but we know that even as the costs go up, service is fucking better, just fucking better. Those of you that have never been to a fucking fine dining fancy restaurant in New York City don't know that there's fucking hundreds of people that work there. There'll be like there'll be like 50 customers, and then there'll be 100 people that work there. That most of them are standing around. No, I like to go to bars where there's only one person working, and it takes me 20 minutes to get a drink. I love that. I love that. Don't worry, guys. We have computers now. Every time I go to CVS, Dwayne Reed, I just go through the self checkout. No one even works there. Every time I need deodorant, it's in the locked compartment, and I have to fucking break my way into it because I'm not gonna wait for someone to get the key. But isn't that because they don't want to pay him more? That's actually not why. But when I go to McDonald's and I go onto the touchscreen, I order my meal and it comes out fucking the other end. I don't even think anyone works there. Never seen someone at my McDonald's. Just a screen, and then it comes out the side. Technology. I wonder what those people are gonna do. I can't find. I think this Microsoft move is going to be the one that we really want to try to catch at a very good low. I'm going to be a little bit riskier on that. I think, again, Apple's not really, I don't think, as much of a concern. We have the support right here underneath. So that's kept the aggression. But I think Microsoft here, when you think of all of them, has trended down the most. But this move here, I think again, we had a lot of interesting movement here. This one here is going to be very difficult to time. No timing, so I think we have to be aggressive. Have to be aggressive. Again, this is the 10% of risk. This is certainly if you only have $10,000, you don't go put risky options on here. In terms of, let's put a line in here. I keep saying that, then it's like, well, what do you mean by timing? Let's take a look. Right around in here, 240 looks pretty good. Like 240. I think 240 is probably what we're looking for. If not 240, I don't think much more. Don't think much more. 239. I'd be buying a rate here. I'm buying a rate in this area. If it goes down further, then okay, well then we'll just we'll watch it. I don't think much lower. And you can tell by the other megas. You can tell because the other megas are still above their lows from yesterday, and that's where this is very much on its own. And this is, again, you have to make decisions a little differently compared to the average here. Our average is telling us to continue to hold that position from yesterday in the attempts that we've made and to continue to buy there. Microsoft being a little bit different here, that means you need to, again, it's a different aggression. And so when I take a trade like that the people taking trades like I just took right here, it is different than the average, and the average is going to come in on momentum to the upside after a low is found. A low is not going to be found unless people fucking buy. So it's risk worth taking because people are selling, and options are definitely like that. Google is very similar, but I'm still giving it a moment. A little different than Microsoft because Google is fucking all-time high, well beyond. I mean, it's not even close. Love these candles though. For a big day like today, now the surprise behind us. Again, the surprise is behind us. Now it's inflation all ahead of us. And this is your spot. Okay, well, let's get in here as well. Little Microsoft Google tandem. And that's what I got for growth. That's what I got for growth. You won't find me. You will not find me in those other chains. Don't think so. This does not need to be the low as well. I might get stopped out a couple times. I've got the orders ready for that. I think otherwise, let's see. In terms of full, how much money? Link here. We're up 3% on energy. Good job, guys. 3%. It's not even 11 o'clock yet. Banks here definitely allows for some market participants to get new entries. Now it's very specific. It's very specific because when you look again at some of the big banks, they are actually up, and so yeah, it's not so much Morgan. I guess you could snag a Morgan here. Basically, all the big banks are up. I was thinking for some that are not in BRKB, or if you transitioned like I did and you haven't re-entered, very nice opportunity to re-enter here. I talked about the transition here on the trend line in this position. That then led me to me getting pushed out of this position when the trend line broke. This is definitely your re-entry here. I've already taken that, but thinking of something like this, again, when we talk about 90% of your portfolio should be on the value side, this is something that you need to always be in. If you're not always in this, then again, you've missed out on a lot. That doesn't mean you're going to miss out in the future if you take the trade, right? These things again continue to get further and further bought. And it's not so much the price. I think it's not so much that the price matters. That again, you try to put inflation numbers in there and try to adjust these things. It's not a question of whether or not the price should continue to go up or not. Is the value of the company going up or something? Like, these things don't, that's not the point, right? It's literally not the point. And so whether or not you want to try to find some fundamental reason why price should go up or not, the fact is it's being bought. And when things are being bought back and demand continues to be constant, the supply is not changing. So again, prices will appreciate and continue to go up. When we have these numbers continue to go up, and these things are, you can use that idea on some other companies that are moving, swinging back and forth, and that's fine. But on something like BRKB here, and we talk about banks, energy, we talk about healthcare, some of those the big healthcare giants. I mean, these things are very much, they stay the same. They don't really change. Or you just want to be a part of that trend. If you can just stay in one long-term position, that's easier. But of course, we've been, we still want to min-max through some of those. In terms of some of these trades, again, I don't think anyone got pushed out of any of this, but if, let's say, you're a little bit more sensitive through, so let's say you traded T or something, which again, this is not a firework trade. But let's say you took this trade, and now let's say you took profit. Again, I didn't take profit on this. I'm in the same position. But let's say you transitioned, right? So you started to take profit. Then, again, you're looking at an area here where your probability is pretty good for two pullback candles here. The CPI numbers are behind us now. There's no more events. We have retail sales on Friday, but all of this is behind us. Again, that was the whole thing leading into it, as you sell leading into it, and that's it. Now it's behind us. Now we keep trading on a trend. What was the trend before? Well, it was this trend. Okay, well then just throw the line over there, right? That's going to happen in a lot of places. We don't need to be hindsight Nancy's. We can just admit to it now that that's what's going to happen. The only side is growth, that we don't know that for sure. And that's why it's a risk. That's why we're trading it that way. Right? Otherwise, everything else, these are basically the same. Again, this has some tech companies, so you can call this selling into CPI, but the trend is probably, in terms of probability, even with those tech companies in here pushing the average down, it's going to be the exact same. So it's just a question of how much and how fast. This is a very nice zone. Now, this is, albeit, a lot more than I expected. This is, if you go to the Dow tickers, the most obvious energy and banks are green in the Dow. When you start to look at some of the others, HD being down is not something I expected at all. Very, very much a surprise to me. Things like Visa here, we talked about a little bit. It's very hard to read into this move here. And so maybe not so much Cisco. That makes more sense on the IT side, but uh, obviously Apple, Microsoft, CRM, all being down. INTC, we've talked about those. Understand it's again these retail stores, things like Walmart being down here. You need to start again. This is where you can start using some of your own opinions. Does it make sense that Walmart is down after seeing increased inflation and consumer spending is up higher than ever? Does it make sense that we're selling this here? It doesn't, right? And so that's where you can go, oh, okay, so I should buy that, right? This is because of an average and because of rotation, not so much again of an actual let's say situation where it's actually being worse off. It's better off. It's better off, but the buying just hasn't really came in here. And there's a rotation to get to that point, right? The bid is going to be further than this selling here. The upside is going to be larger than the downside here. You get pullbacks. It happens here, right? I'd be looking at things like HD, Walmart here. They have earnings come up here. We have retail sales on Friday. I would really be, ask myself if you don't have these type of positions to maybe think about it. Things like McDonald's here. We've talked about food and beverage. These things have just continued to trend up all-time high nonstop. This is the first time they've really had a pullback, and it's coming when the numbers are good for them. It's really important to make sure you're, again, aggressive on these. And again, this is where 90% of your portfolio should be anyway. So those of you that did see these moves and then were like, fuck, man, I didn't even look at these. This is probably your opportunity to maybe reevaluate your situation and to think about, okay, I don't need to be perfectly right on this timing. You don't need to time this perfectly. It's just getting in there, right? So that you can get the next move. And again, I think it's here. I think it's here. PG move's gonna be interesting. We got the rejection from the resistance, but this is definitely a much more bullish candle for the upside. Very similar to the move, and so we'll see if this finally makes the move through there. Looking for things like this again to really put. I was going to post the CL chart. Oops, excuse me. There. Oh, it did load it. Okay. I was going to post the CL chart here as well. I think you can see it. Looking at this for a trade as well. I was going to post it, and then we get this candle. So I'll post it over lunch for you guys. But this is something I'm also looking at. It's very much the same thing, right? This is just it's just going to appreciate. Just going to appreciate. We actually traded this chart previously through this idea. That's also very much related to the PG move and everything else. So, see, healthcare companies, United, Anthem today. These candles basically stand out. They tell you to buy me. If you're not already a part of those, again, you're getting an opportunity. To the rest of us, it's nothing. It's just a blip, right? Again, it when I say it's a blip and nothing, again, look at the weekly charts. Yeah, it's literally nothing here. So yeah, this candle's a lot larger on the Dow now. Increased volatility because of an event, right? And now it's past us. Still a higher low and a higher high. I guess we can lump again. I keep talking about Pepsi. Pepsi and Coke are the exact same thing. Exact same thing. Let me load up Bloomberg here. Let me see if we got anything. Vice Chair of the Fed spoke at like 9 o'clock. I didn't see those comments. Yeah, she basically said nothing as usual. So yeah. Also, what do you guys think about? What do you think about the whole Israel thing? Okay when they do it, huh? Okay when they kill people. I'm not sure how I feel about. Yeah, the Iron Dome thing is insane. that I think the title was labeled wrong because you don't actually see the rockets being shot. Every single one of those lights you see in the air are from the Iron Dome shooting a missile. So there's a lot more. There's a lot more rockets in the air than you see. But yeah, Iron Dome's insane. But I'm happy that that's there. I'm not happy that Israel is uh fucking launching missiles into Gaza again. I'm not okay with that part. I'm so confused. I'm so confused with the U.S.'s rhetoric around Israel still, and actually Biden's continued it since Trump as well. I just don't understand it. Like we actually want there to be a problem. Like we actually want there to be problems. We're trying to stoke issues, and I just don't get it. Like I love Israel. I've been to Tel Aviv before. I have friends, like I have Russian Jew friends that their family lives in Israel and stuff like that, and I think it's an awesome country. But fuck me, that part of just wanting to go fucking kill Palestinians is the most ridiculous thing. It's just, how have we not, after we're talking about thousands of years here, the Crusades, everything else, and we can't fucking stop doing it. Like, what the fuck? Yeah. Yeah, invade. Yeah, I've seen a lot of that too, and I think it's just. I think it's us. Like we we are a lot of the problem. That's where you see, look at the timing. And remember, we were just talking about this like big idea focus on things of how, oh, now we're leaving Afghanistan. Oh, look at us leave Afghanistan as there's more Middle East problems as usual. Oh, I guess we'll have to stay. I tried. Biden's going to be like, well, I tried. I tried. They wanted me to stay. Sorry. The Middle East begged, don't leave, please. We have more issues. Like, I don't know. Just feel bad for normal people. No fault of your own. You're born there and you've just got fucking Israel. You live in a tiny little area and you've got this fucking mega power, superpower, backed by another superpower. Just fucking, just because of dumb reasons, killing you. And then they blame other countries for genocide. It's okay when they do it though. The cost of peace is just too high, guys. We're not willing to pay for peace. It's too expensive. It's fucking cheaper to go kill all of them. The reality, you ain't gonna fucking pay Palestinians fucking kill them. Wonder how long it will take us to get out of some of this religious flavor. I thought we were getting close. Maybe not. Since the Trump thing, I don't know. Even in this country, I thought we were getting really far out of like religion and politics and stuff. And then Trump happened, and I was like, holy shit. It's not just racism, which we're trying to get over. The whole religious thing. Religion's fine. People can have any religion they want. It's just insane that we actually still are making policies around it and like actively going to war over it. Like America it's so easy to blame Israel. And yes, it's Israelis and in their rhetoric, but we're the ones backing them. So it's ours. It's literally us. It's like when the Iranian nuclear scientists got killed, and we were like, no, it was definitely Mossad. It was definitely Israel. Israel did it for sure. It's like, okay, who trained them? Who's funding them? Isn't it every time Syria does something, we blame it on Russia? And we say no, Russia's backing them. It's Russia's fault. What about when we back Israel and then Israel does something really bad and then we go, no, it's not us. It was fucking it was the religious part of it. It wasn't us. Okay. But you know what that means? That means we get more on Lockheed. We get more across the whole board. We'll see. By the way, aerospace and defense today, not much, huh? Not much. Not much. We're getting, I mean, we're really pushing a lot of, getting quite a bit of green here. Also, look at Chris. Chris is just, what a soul. This kind of shit is just, I don't know what that is. Bio's doing their normal thing. Bio's doing their normal thing. Across the board, by the way. Which is so funny because we've been trying to trade all this stuff and then we get this like IP thing, so I stop looking at it as much, and then today you get this uh get some of this stuff. Am I missing something? Let's see. We got anything? Let's see. What do we got? What do we got? I have no idea. All blends into tribalism. You know? Interested to see we're becoming so globalized, but yet we're all so anti to everything. We have issues like China with their concentration camps and stuff. We haven't done anything. Haven't said anything. I mean, there's like attempts to do sanctions or something that's just not going to happen. It's not. It's it's not the 1930s and into the 1940s anymore. Yeah, Myanmar, nothing. I have a friend. I have a friend that lives in Myanmar. I went to school with here, New York. Um, he's just plays games all day still. Uh, so he's been fine, but yeah, it's like what are we doing now? But it's always been like this. It's always been like this, and I hate to make it so racist, but it's pretty much about race and American interests. If we don't have any interest in those countries that things are happening, then we do nothing, right? Anybody remember a genocide from a little while ago in time that we did nothing about? Yeah. Yeah. Which one exactly? There's been some big ones. What about Rwanda? Anyone remember Rwanda? What do you mean there was a genocide in Rwanda? Oh, I don't know about that. They'll handle it. They'll be fine. Rwanda will be fine. They'll be good. We don't have any interest there. We don't mine or anything there, so they'll be fine. UN goes, nah. Nope. Nope. Myanmar? Nope. No idea. Isn't Myanmar Burma? Nope. Nope. They changed their name. Yeah, but who cares? Like, who cares if Palestinians die? Because they're just they're terrorists anyway. So right? That's like the rhetoric right now. Like, I mean, they're the ones shooting rockets at Israel. They're the ones shooting rockets, not Israel. I wonder why they shot rockets. Maybe it was because their neighbor fucking sucks. Every day is a day you don't know if Israel's gonna fucking invade you. How long does it take for Israel to use their nuke? Israel has a nuke given to them by the United States. Just one? It's one or two, but I think it's just one active. Maybe it's two. Well, yeah, I'm pretty sure just one. But it kind of makes the whole attacking Israel thing kind of suck, doesn't it? I mean, at least for Gaza, they're not gonna nuke Gaza, so maybe Jordan or maybe Iran sometime. Oh, sorry about that. The other thing to remember is that we have a lot of nukes in Turkey still. And that has always made things interesting, I think, because of our our negativity to Turkey. Turkey's a part of NATO, but yeah, we keep like we have so many weird sort of situations around the world that it's just like we have all those nukes in Turkey because of the Cold War, so we could aim them at Russia a little easier. But then it's like, what are we doing here now? That like very strange geopolitics of. I mean, some of these situations are like head scratchers. And how do these all play into equities? I don't know. All these different things, I don't know. How little they matter, I guess. I do wonder though. Wonder. Also, the population thing I think is interesting. Populations around the world declining, which is probably a good thing for humanity, so that we don't overpopulate the planet and cause more problems. It's not like we need to keep growing to be human or something, right? But it does present interesting problems. Pensions has always been the biggest thing, but US numbers did go down again, declining. Wonder how much that matters. Less people, less productivity, but we're increasing technology so quick it's outpacing population anyway. Unsure. I don't think we have any we actually don't have any historical context for declining populations, I don't think. Japan's the first major nation that's going through the population decline with they're going to basically have their population will have by the end of this century of all the old people. And it's happening right now. We don't really have any historical context. Chris is now at 40%, by the way. What the fuck? What the fuck? What a interesting. That spread. It jumped 25. It jumped over 20% in one tick. I can't wait to tell you all tomorrow that obviously, since we've been looking at this chart, I bought it. Duh. Of course not. Would have been nice to get lucky on this one, huh? If this happened when we were trading it, all of a sudden it just went up 40% randomly. You're like, oh, nice. Meant to do that. Very interesting. Off of those earnings. Well, I mean, I guess a big question right now for everyone to answer is, for some of these oil companies, how far does this go? And how much does this rally go with some of the things we've seen in the pipeline? And, this is where, again, I do these transitions to avoid any downside. I think for some of those, you need to continue to, it begs the question, really begs the question. Could I just be taking some of this profit home and then I'll just take it again here? And not clear. Also, Baba earnings. Can it get any worse for China? Or is that finally the end of it? That would be $1 million question. So all we got was energy to move, huh? All we got was energy to move. Come on. Come. I mean, we're just watching energy explode, so let's bring it all home. Let's bring it all home. Can we just bring it all? Bring it all. Let's watch the dollar come back through here. I don't think volatility already started, but let's bring it home. Bring the risk. Chris is now at 50. What is going on with this thing? 52%. Here we go. Fuck. Oh, shit. A week too late. A week too late. What is that? That's going to 100% or what? I think it's going to go another 50. Here you go with retail. This is getting bumped. This jumped on Robinhood screens around the old retail crowd. Oops. Okay. And I just thought about as for retail, Viacom, Discovery, TME, Bidu, all of the Archego stuff. I think retail is going to come back to equities. I wonder if this is a good place to start. Everyone's aware of this. How do you spot a retail trend before it happens? How do we spot the next GME, the next AMC, the meme economy? How do you spot a trend in the meme economy before it happens? I feel like this would be the next area, right? Buy SHIB. Oh yeah, SHIB coin. I don't know. I think they can. I think it'll come back to equities. I don't know if there's like a cycle there or whatever, but as you get a consolidation in cryptos, not much you can do there. Jump back over to equities. We've seen that the spreads can just cause it can cause price to increase a lot, even though there's not much buying. It's just retail's willing to pay any price, and so it looks like so much value is being added, but it's just the spread is so wide. I wonder if now is a good time to go take these. I don't think you can get. There's not much downside. Before there was still more downside, and that was part of the risk that we wanted to take anyway. Was that it was unclear. It obviously didn't go to the upside, but now there's really not much more downside. Again, it could, but it's not going to go so fast to the downside that you can't exit the position. You'll always be able to get stopped out of this now. Over here, you're basically putting you're putting whatever money on the line, and you're gonna have a hard time. Over here, though, nothing happened with earnings. Maybe we should go. We should buy some short term calls here, and then go post some shit on Wall Street Bets. Buy a couple bots, have them post shit on Wall Street Bets, Twitter. And I was just talking about this the other day. I think yesterday, joking about some sort of pattern in here. But I mean, it is consolidation, so it just depends where you draw the line and when you cross it. Do we wanna play the lottery here? Been thinking about it every day. I think we're very much entrenched in our positions. I would like to have some fun. Just a local high. Mm. Oops. Mm. I mean, none of this shit matters. You look at anything on a longer term perspective. I mean, none of this short term volatility matters at all. Doesn't matter. Bye, bye, bye. I wasn't too sure about this move this morning. It was such a big move yesterday on the old triple deer. It's about halfway through the candle. Well, halfway through the move. But it didn't. It's not so much holding the support here, because that would have been the perfect entry off of this. You get the 35% yesterday. This pulls back just about 10% to get that buy on 25. 21, 20, 21 and a half, sorry. Wonder if there's just a little bit of error there. Might be just a little bit of error there. Can buy on that right there. That would be the entry. That would be the entry. Let me give it a moment. Give it a bit of a moment there. Just to see the tick. Just to see the bid. Everything else has been pretty good. Here, give me one moment, guys. All right, so I think we're getting some political pricing right now. Biden Biden is they're having a meeting right now. Biden and GOP leadership and everybody else is having a meeting on all this shit. And I'm wondering if the market is gut checking whether or not you're going to have politicians come out and say something about slowing down spending or not. The market wants them to spend more money, but I wonder if the market is actually fearful that Biden will react to the inflation numbers. There could be some waiting here. This is not selling, this is less demand, right? I wonder, since this meeting is happening right now, whether the market's waiting to make sure that when that gets finished, that someone's not going to come out and say that, you know what, we saw the inflation numbers, we might need to slow it down a little bit because we're afraid of inflation. That would be a political problem. The Fed wants the inflation to keep going, and I think markets want that too. Again, you can talk about inflation all you want. It leads to asset prices going up. So like there's no way you can kid ourselves on it. Wonder if the market wants to make sure that on the political side, they're not going to change their tone and that Biden's not going to go, okay, you know what? We'll lower the spending a little bit, right? Let's see here when we get through, and they're having it right now. Let's see if we get through. I don't know when we would get information, 30 minutes or so. If then the market goes bid from there. I think that's what's going to happen, but I don't know if it's not so much a coin flip as much as let's just make sure the politicians don't make a rash decision because of inflation when the Fed says there's not a problem, so that they lower spending. Because if they lower spending, if anyone came out and said they're going to lower spending, the fucking market would hate it. And that would be the exact opposite of why we would say that they're selling for inflation. I'm pretty sure this is all political. And if I think back to what I was thinking a couple weeks ago when I started this idea that maybe we need to pay attention to the politics a little bit more and seeing exactly time frame and the reactions there, I wonder if the market's also thinking the same thing here. Thinking, okay, let's make sure politicians don't start making decisions on things they have no fucking clue about, right? They have no idea how this shit works. So let's see here. Get out of the meeting. All goes well. No one changes up their tone. Keep spending. Then we're truly past these numbers. But I guess we're not truly past it until politicians don't do something. So never know. And that's why something like energy continuing to go here. Energy has nothing to do with politicians are not going to change anything on that side. That's nothing can get changed there, but certainly all the others can, right? So when you look at banks, infrastructure, those things that are supposed to be getting benefited from inflation, they're not moving just yet. Waiting very patiently here. Let's say waiting on politicians. So you do have an opportunity to make a bet on whether something's going to happen in the next hour or so, I guess. And I would say you've got much higher chances that they don't say anything. They're not going to do anything. So there is a play there, I would say. But it can again just be this can be your new buy position from a low. So what I'm looking at as. If something did happen, then I would be pretty sharp on my reaction, I guess. I think it's almost an impossibility, but I guess the market doesn't think so. Could be tonal, but how are they hedging? Okay. Is this money that's being sold from gold that come into equities right now? Money goes from the dollar to gold to equities. Give me futures. Give me. Look out. Okay, so it's not that. Get stopped on that. Omegas are not going to get stopped out. That looks nice. QRTA on that 13. W is possible as well. We missed this move on the upside. A very interesting chart. Semis we're still waiting on. That was a nice bias shift. We were doing okay. Doing alright, scraping by, and then good thing we turned that bias off. That could have been rough. You never know. A little bit of luck there. A little bit of luck. BLMN very, very volatile, but even that space is very bullish. Hmm. What I'm questioning right now. I'm buying. I'm a buyer. Not changing my focus. What I'm wondering now is from seeing the price action whether we should go a little bit more out of the money. Go out of the money on individual tickers, or for instance, just DIA for the Dow, or at the money with leveraged UDAO, for instance, or still going out of the money on a leverage. Really load on some of the risk. I think mega caps for the growth side is still plenty of risk. Don't need to get too risky on those. They should still just be at the money buys. You know, doing our normal sort of trades there. Not trying to kill ourselves. But on the value side, I'm wondering just how much risk we can put on. Should be substantial. I mean, this is gonna again really whip back. I would have to say. And it needs to be traded for that, I think. I don't think I can pussyfoot on some of this. So things like retail stores, as I take those trades, I think they need to be pushed further out of the money. And then we're taking those 100% gains. I think taking a trade here where I'm not getting paid for the risk, I don't think makes sense. I shouldn't have to buy here and just get a normal sort of reward for it. They're selling here when I don't think there should be, because it doesn't make sense to sell value as inflation goes up. So I'm going to take more risk so I can get paid for it through that curve. This is where yields are not, again, yields are not my concern here. They're not in a realm of concern. And energy's just fucking blowing by. Energy's making the move that value is going to be making overall. So again, we're doing very well through energy and oil and everything else on that side. I think banks are making a bit more of a lagged move. But it's the same story here. That is, if you're adding on more here, I don't want to just add some normie position in here. I want to get paid for the move that's going to snap back. And I think that requires out of the money, unfortunately. A little bit more risk. I don't know if you can. I mean, you can certainly shorten expirations, but that doesn't so much matter here because you want to be pushing those positions longer anyway. That's why you could buy out of the money, so that you could still push a 3-month option with just a higher strike price, so that you can get that exponential up to the strike price and then go through in the money. Those are very different things to having something that gets in the money that you need to transition. And again, it's a question of how fast. That's where the how fast part comes in. I think it's faster here. I think there's a mistake being made. Or it's not even a mistake, it's just price reacting. I don't think this is actually outflow. We're not seeing an outflow. But it's something that we can take advantage of on the option side that you wouldn't get on the underlying, right? The underlying has barely really moved from the high because we put so many points on so quickly. The option side's very different, right? We have fresh contracts over here that we can actually go buy further out of the money. That the way the numbers work right now are probably, I mean, they're just kind of priced as if they're impossibilities, but they're not. It's not impossible for the Dow to go back to 35,000. 2 days ago, the Dow crossed through 35,000. Buying up there is not that. It shouldn't be as cheap as it is. Be more volatility at least. But I think you should. There's some chances I should be taken here. I know we've been taking chances for a while, but the reason why we've gotten paid because we took chances, right? Got paid through everything through here for the risk we taken on. Not gonna stop now. Not gonna stop now. And I think the girl side looks a little scarier, but I mean, still not gonna bet against mega caps, even through. Good move. Follow the leader. Follow the leader. That bring us home, baby. Bring us home. Like the market had the same idea on mega caps that I did. That's a good sign. That is a good sign. Wondering about aerospace and defense a little bit here before we take a break for lunch. I've had some hard times on. Had a hard time on these charts. They're such a mumbled mess. These charts definitely need to be looked at in the longer term perspective, right? Where we're looking past day to day, we're looking weekly, monthly. RXT that moved down there, I don't think we can. Wait, that's not what I meant. Hold on, what am I thinking about? Oh, Jesus, now I can't remember. Okay. SPR. SPR, I'm thinking about a little bit. Again, we were just looking at this move through here, and I talked about the nice upper wick here, even though we continue to get rejected through the consolidation. Looking at this space, the Honeywell trade was very nice. Some of them have been very nice swing trades. We keep taking the swing trade, then look to push it further. But even again here, we're just waiting for that kickback. As Makiza says, energy. Yeah, the energy just continues. I mean, it hasn't stopped. Obviously, hasn't stopped. Oil is just, this is where we're making all of our gains right now, which, yeah, the reason why we're just trading through our benchmarks, energy, and banks. But we are waiting for industrials. I don't think you're in here, Makiza. It's talking about right now Biden's meeting leadership. And I think the market's a little worried about whether or not, so we get the numbers for inflation. That's good for the value side. Everything that's there is good for the value side. Okay, so why is some of the value side selling? We can say it's because of the average. But there's also the dynamic of the politics. We need to make sure that when Biden gets out of that meeting, we don't have politicians making rash decisions going, well, the inflation numbers came out. We're not going to spend as much money. Is the market getting negatively affected because of inflation? Or is the market going, no, we want spending, we want inflation, so we want to make sure that due to the inflation numbers, the federal government doesn't go, oh, we're going to cut back on spending. I think that's actually quite literally what the market's doing right now, which also makes sense why energy continues to go up, because it has nothing to do with whether spending increases by the government. So I think we're literally just all sitting here waiting to make sure politicians don't make politician decisions and go, oh, you know what? We're going to cut back the $2 trillion infrastructure bill to $1 trillion. The market wants more spending. I think the market wants to make sure that we don't cut back. That's where it's the opposite. The media is saying that we want to make sure inflation doesn't cause the Fed to stop what they're doing. No, the real thing is we want to make sure that the federal government doesn't stop spending. The politician, the elected official side, not the Federal Reserve. They continue to double down on their idea. I think we're waiting for this meeting to get over with. See what the pricing comes in. We are buyers. Bum, ba-dum, ba-dum, bum, bum. There's still no fear. We continue to put lower lows, but we're still no fear. Anything of notice? Just repeat it again, but inflation, good for value, waiting on politicians. Never in a meeting right now. I'm looking to buy everything. So a lot of long positions remain. Energy continues to dominate. So we're getting paid for our trades through energy. Banks continue to hold. Most of value is holding, but a lot of the average is coming down because, again, growth is getting beat up for inflation reasons. We're not looking to trade anything on the growth side besides mega caps. I took this low trade again today. And then a lot of the fear, if there is any, and then a lot of the negative pricing is coming from whether or not politicians are going to come out and stand by their spending. I think that's really what we're seeing right now. Making sure that politicians are going to continue to spend after seeing the really, you know, upside inflation numbers. 4.2% CPI right now. We're going to let it run past 2%, says Powell. There's going to be shocks, right? This is what happens. This is how inflation works. This is like job numbers. Job numbers were significantly down on Friday, but we know the jobs are coming back. So again, the data is very volatile. We're in a very volatile situation. All of it means reopening economy, asset prices increasing. So again, pricing here is not pricing for next week or something like that, and that's where looking on a longer term horizon, everything we've seen is good for the long term. We need to be thinking longer. We need to think longer. When we're buying here, we need to think past getting stopped out today and think about buying again to have the reward of next week and the month after that. Again, we're not gonna ignore price, of course, right? We're not gonna ignore price, and that's where we're making we're making decisions with technical understanding that okay, we break a level, we're gonna wait for the next level to buy again, and we're doing that, but we're using this macro idea that okay, asset price is gonna continue to increase. We're gonna keep buying. But again, we have a lot of green, so we just have tech selling. But it's again not mega cap really related. We'll see. This Microsoft trade I'm now getting into, and we took this 240 trade. We'll see here. Let me load up Bloomberg again. Let's make sure we didn't. Nothing. I think we're good. We're good. So again, value directly benefits. So not going to stop. And I just talked about I'm going to go further out of the money. A little bit more out of the money instead of buying at the money, because the problem is, again, if the rationale is to buy pullbacks, and the reason is because the inflation numbers are how they are, then that would mean that, again, prices are going to go further on the trend. It's not so much a recovery, it's a continuation. So I'm going to be buying a little bit more out of the money. I'm looking for when do we buy retail stores. And looking at it since the morning, we have not had any opportunities really yet. Not yet. But now we're waiting. Now we're doing market gymnastics. We're literally doing market gymnastics now, because now we have to wait for the whole market for everything. We're adding like new layers every 15 minutes. We're adding a new layer. Energy continues to climb, so we have continued rotation there. Banks are reacting on an average. Banks directly benefit from inflation, so anything that I need to take profit on or I'm looking to buy on, I'm gonna buy a lot different than if I'm just buying on a trend. I'm now buying on a pullback that I know this is getting sold from an average. Banks directly benefit from those inflation numbers. They directly benefit. So again, not everything adds up the same way, but it's because the market's just reacting in the same way. So, and why are we reacting right now? That's another question. That's why I think that this movement right here is news trading. It's very important we single out that, and that actually offers opportunities. That's where, when I was just looking to buy earlier, right? Microsoft on 240, it's the same idea. I'm going to buy on the low. I can now go, okay, I can hold through this candle right here because of this idea of a little bit of news trading around, okay, we have Biden meeting and they're literally talking about the thing that directly affects everything. So it's like a lot on one sort of idea of news. I don't see selling. I see a removal of demand still. As soon as that changes, I'll change my script a little bit here. But we're not seeing a change. And I think the easiest way to tell is through look at the volatility. The volatility is not the volatility is increasing. We haven't had volatility increase at all recently. It means we're really looking to be anxious around some news. Okay, now we're getting our energy move. More volatility to the downside means more volatility upside if there is upside, right? That's where my discussion of more out of the money comes in to capture more exponential. $12 entering lunch. We still have a lot of activity though. Energy is still so strong. It just makes things so awkward. You have to trade everything so differently. Nothing is losing. Anything I've entered is not taking points off based on the underlying. We're still holding flat. And most options are speculating further upside. That has not changed since the all-time high. Most IVs are pricing in a price move. Now we've got the downward price move on some things, but they're still pricing up further price move. I find it highly unlikely that some of these like 10% price moves are being priced in for the downside. I find it highly unlikely when we still have such a ratio of calls to puts, right? The puts that we had were hedges going into inflation. And they're getting paid. And I've talked about this. What happens when hedges get taken profit? You hedged inflation numbers, and then there was a surprise, big surprise for all of us, right? That inflation was up. Okay, so you hedged that event. What are you doing right now? Well, you're taking profit on your hedges. You don't need to hedge anymore. You hedged. What were you hedging? Your long positions. Did you exit your long positions? No, you exited your puts. Now the timing is a little elongated here. That's why I'm trying to find new excuses, as in politicians being in a meeting. But sentiment's not wrong, at least. It is a surprising candle. That is a surprising candle to me. It is very surprising. It's a welcome one. It is a welcome one for new entries. It takes some off the top on some of my positions for sure, but it is a welcome one for new entries, and that's why I'm willing to buy out of the money on some of these. So, fucking reality. And this is why you can look at energy and be like, if you're gonna offer a pullback on energy, it's gonna be bought. And that's where you look at any of these days. We had these 2 days, and I talked about how confident I was to buy on that. We already bought through this. We already bought on this low here. and how I was confident buy through that. The same thing happened here. How I was confident buy through that. This is the same confidence I have on the market in general. You're seeing it on one side. I think we see it on all. It's, again, timing is definitely a lot different than I thought. Definitely a lot different. But they're not different things. They're not different. Not different. We're going to get retail. I think we're going to get retail. Also, you can see how some of my bias is creeping in because I'm like, if I buy out of the money contracts and retail's going to start trading equities again, then I can sell them my out of the money contracts. I'm like, I know there's somebody out there. Am I the greater fool here? I don't think I'm the greater fool. So if I don't think I'm the greater fool, then I can buy something knowing another fool is going to buy it. Even again, I don't think it's going to be that situation, but worst case scenario, I think that would be the case. So it's not so it's here's a good way I usually test my bias. This is how I test my bias a lot of times. What would be the more riskier bet? To go long here or to go short? Which one's riskier? I would not short this ever. That would be extremely risky to go buy puts right here, right? I would say that's extremely risky to go short the market right now. Okay, well then, it doesn't justify going long. We have other justifications for it. But just in terms of going long or short, I would not short the market. Even on the tech side before, we already discussed about why the tech side was going to sell, but we weren't buying it was the response, right? We weren't shorting, we just weren't buying, right? On the market overall, like S&P, no. I would not short this. That would be extremely risky. A lot more risky than going long here, right? And so that does give you some idea of biases because it's like, if I'm not willing to short, then do I really think prices are going to come down here? Does anyone willing to short here? The shorting that happened up here was to hedge, right? And you can buy puts to go hedge your long position, but that's still a bullish scenario. Hedging is for long positions, right? You can hedge a short, but most hedging, most put buying is again for your long positions. Anyone buying puts down here? Yeah, that's not going to happen. So, again, one thing leads to another. That means buy. That means buy. You can make an argument for shorting at all-time high. Shorting 2%, 3% off the all-time high. No. Yeah, I'm trying to make a lot of activity and noise about a lot of nothing. So, again, day to day does not really matter. I'm just trying to be very active in problem solving to time my price here a little bit better than the average to get some alpha, right? We're still talking about a situation where if you just go long, nothing matters. You buy long, like it literally doesn't matter. So Again, I'm trying to just be technical in understanding it in my moves. And I know a lot of you are trying to be much more short term as well, so that's why I'm speaking about it this way. Just continue to go back to that longer term perspective. These things are really in if you've shifted your thinking to monthly and yearly, none of this shit matters. So you just, as long as there's something that does not completely shift whether equities are the best investment or not, then nothing matters. So again, we're just talking about in terms of swing trades and everything else. So really important to remember that and realize that even when you look at some of the tech companies that are taking a lot, I mean, even if we keep this on a daily, does that not still look like Apple, right? Is it not Apple still? Here, I can remove this now. Is it not Apple still, right? Is it still, did something really different here? You're really not going to make money on it? You hold it for a year, right? What about in 2 months from now, right? What about Amazon? Amazon's been the most consolidation heavy in here, right? Is it not Amazon anymore, right? No, you're going to be okay. Even on the most, most volatile side. All we're trying to do is when we get these timings like this, right? Where we do get the timing to go trade it. All we're looking for. Nice swing. Otherwise, the market's not changing. Market's not changing. Just compositionally. Portfolios, composition. Of course, when we talk about things that are more in the short term, like we can talk about cryptos are very new, clean energy is very new. These kind of things are, it's not the same when you zoom out on those charts, right? Because they're new. They're not something that has become a part of the market, and it's not a large percent of the market. Those are different. Those are more volatile. You need to look at those in very short term and day to day, and everything matters. The market itself, though, is not like that. So whether this comes down 10% here, it goes up 10%, there's not much difference. Great area. It's a great spot. But now we're back to Dow 34,000. We were at 35. S&P was all-time high. Now, if you think I'm wrong, go short the market. Again, if what I've said over the last few months, now I was right on at least this part. If you think now that's different, go short it. I'll sell it to you, right? I'll leave you on that note. If you think the market's going to go down further, you should do something about it. You should go short it. Otherwise, we keep buying. I'll see you guys this afternoon. I'm going to be here on the edge of my seat. Not really, but there's definitely a lot going on, a lot to figure out, and a lot that's not going to matter in a week from now. But that's why we want to try to get the best prices now. Try to take the most advantage now, because we know in a week from now it's going to look a lot different. And we can expect a trend in the future, but we want to be able to get the now part down, right? We want to try to make something out of the noise. That's all we're trying to do. So I'll break it down at close. I think you're going to get a lot of buying. So whether it happens or not, it's going to happen one of these days. Obviously, we don't want to be too wrong, but looking good enough so far. Energy doing great. Value, again, should continue to improve. So I'll see you guys at close. Enjoy your lunch. If you are taking on water, then again, taking too much risk on that growth side. Be careful if you're not able to get stopped out as comfortably as I talk and say I am, where I get stopped out 3 times and keep doing it. Be careful if you're doing that. It's probably the timing problem is that you're doing it like during lunch. You're not going to get as good accuracy during lunch, right? That's where I'm making most of those moves during the open, and then we'll push it towards close if we need to. Because again, getting stopped out during lunch and then trying to buy during lunch, you have pretty inaccurate pricing. Um, you're just you're gonna have a hard time, right? So sometimes that can be the problem. Again, if you're feeling like you've had the problem over the last few days, again, the market's been down, so that's going to happen. When it's up, everything seems like it's going great, even if you're missing like 10% of what you could have got, because it's just going up anyway. Try to remember that accuracy part of lower volume. I'll see you at close. Enjoy your lunch, guys.